Hi, this is KIFS Crypto here with your weekly. I would like to start this video off talking about how the crypto space operates based on a numerous amount of statistics and data that try to predict the bottom of the crypto market. However, no one, not even me, no expert can truly predict the bottom. However, as a rule of thumb, to get accurately close to forecasting the bottom, what I like to do, and hopefully this helps you, is to look at all the data from a lot of other analysts and try to collate it and see if there is a similar and reoccurring theme happening. If, for example, most of the analysts are saying Bitcoin's bottom is at 11K, then you can take that piece of data forward and analyze it further. By analyzing it further, what I like to do is take the most common data, say 11K Bitcoin, and when you look at that and make it less dramatic or less drastic. So what I mean by that is, as trading is a game of emotions, forecasts tend to be way more far-fetched than what it plays out to be. So try to find a shade of gray in the black and white of emotions. Add 3,000 to 4,000 more to the general prediction in its low. So let's put this into an example to help best address this in a better way. So if it's 11K as a general prediction for Bitcoin low, add a few thousand. So think of it to be 14 to 15K as the real and more conservative estimate of the Bitcoin bottom. We can do the same thing in a bull market. If the general sentiment is 100K is like Bitcoin is going to reach 100K and that's going to be the general prediction, that's what a lot of people are saying, then lower it by 30% from that as the actual Bitcoin top to about 70K basically. In this way, not only are you not getting taken for a ride, but are able to ride the wave, being in control and buying and selling with a higher chance of making long-term profits. Never try to catch the top or the bottom that others forecast. You will lose a lot doing that. You're probably wondering, why is it at Bitcoin bottom, the general prediction is just a few thousand off, but in Bitcoin at the all-time high at the top, I'm cutting it down by a huge chunk, like 20 to 30%. So this is due to judging the history of Bitcoin's behavior, which generally tends to follow this pattern where the general predictions in the past have fallen off by huge chunks of percentages at the top and a few hundred or thousand at the bottom. So because of that, you can use the past history to make a general estimate, and that is why there is such a difference when I create a rough estimate for the tops and the bottoms. Last year's all-time high prediction was 100K, and didn't it fall short by 30% from that at around 67K Bitcoin? Although everyone was saying 100K, but it turned out to be 67K. So that's the real pattern, I feel. Moving into Ethereum a little bit more, a lot is happening with Ethereum setting an all-time high with short liquidations, wiping out 500 billion in literally 2 days. A lot of traders expecting Ethereum to crash after months of sideways action, but it hasn't yet. And the opposite happened, with Ethereum moving up by roughly $250, which put a lot of misery on the shorters of the market. Another reason to be careful when you're longing or shorting against the market. This ties in with what I said earlier about trying to accurately predict the market. Another thing is it's so difficult to predict the long-term aspect. So imagine how hard it is for short-term trading. Yet it isn't impossible, just incredibly difficult. In terms of macro sentiment, things are feeling a bit green, but not too green. So please don't get too excited. I keep expressing to you to not jump or move too quickly in the crypto space. Move slow and play the long-term game. A lot of people, even those with a lot of experience in the game, move too quick and collapse. So you have to take crypto very slowly, and I can't stress this enough. The interest rate hikes are in a space of decreasing its basis points. So what that means is while interest rate hikes are increasing, the percentage or the amount being raised is decreasing. This doesn't mean that we are in a bull market yet. I know all of this is overwhelming, and so I will break it down for you with the help of a metaphor to show you how Bitcoin is placed in effect with the interest rate hikes. So the metaphor goes something like this. Imagine Bitcoin is a ship and is still in negative iceberg shaky waters. But the wheel that steers the Bitcoin ship, which is the interest rate hikes, are steering slowly away from shaky waters. But they have to steer slightly right towards negative shaky waters to unclog the steering wheel to move left to calm waters. And that is what is happening. And so seeing the interest rate hikes behave the way we can be more hopeful towards an eventual bull market. But it's still a while away. For a bull market to actually take place, we have to see the steering wheel, which is the interest rate hikes, that has to unclog and move left towards calm waters. Now, this simply means that the interest rate hikes not increasing and its rate hikes at all. So it's not increasing its rate hikes at all, and moving into negative rate hikes is when we can see the ship sailing left into calm waters, which means Bitcoin is essentially exiting the bearish territory and is placing itself into a safe space where it is more likely to propel itself and in a better place for an eventual bull market. So as you can see through the complexity that Bitcoin isn't just bearish or bullish, but has multiple phases to go through before reaching either side of the waters. The crypto space doesn't move either black or white, but in shades of gray. So as you can see, I'm here to demystify the complexity of the crypto space, one video at a time. If you like what you see, you know what to do.